Hi, family. Hope everyone is well. This is Dr. Financial Literacy, Will, aka. Happy to have you come along with me again today. This is day 16 of a full month strategy in which I was trying to use bi-weekly payments from my check to do velocity banking and to show viewers and the community how it can be done in generally. So over the past 16 days, I was able to take my biweekly paycheck from March the 8th of 1694 and also March the today's date, March the 21st of 1695, putting both of those together in general. And that shows me having a total income for the month of $3,390. So that's two biweekly paychecks of 1,600 plus that I've used velocity banking. One of the challenges with velocity banking that has been indicated, being able to pay your rent or your mortgage with it, because I've set up overdraft protections within my checking account, I'm able to write off on top of a checking account that I have very little in, and then make it pull from the credit card where I'm getting some reward points in cash. So, in general, starting off for the entire month, two biweekly checks, $3,390. I've estimated and rounded off my expenses to make the numbers kind of flow easily, $3,000. So from 3390 to about 3000, I have a cash flow of 390. For many of you who saw in the beginning from December until now, that is an increase because I started velocity banking with a negative cash flow of about 15 to 1600. So yeah, you can, or I have started velocity banking with a negative cash flow using my credit cards. I initially started this trying with getting a home equity line of credit, could not get it. I tried to get a personal line of credit, could not get it. So I just started with the improving my credit by going after the credit cards that I have and the various balances. So with on the average, I started keeping a budget with my bills starting in January. So on average, these are some of the amounts. So over the last 3 months, my rent 1,277. That's not an average. That's really what it is. The utilities average about 439 in general. The monthly bills, the credit card, insurance, the car payments come out to be about $1,008. The daily bills that I have, getting gas, getting groceries, maybe eating out, repairing a car tire, writing a subscription or something like that, comes out to average $253 over the last 3 months, starting from January until now. That totaled about $297, but I rounded it up to $3,000 to give myself just a little more room and to make the numbers a little bit easier to digest and work with. So with expenses of $3,000, and according to Velocity Banking Advocates, if you make a payment onto the credit card, and some call them debt instruments, then the savings from that card becomes cash flow. All right, so let's go over to the next column. So I selected one additional credit card because I've been able to pay off, I would say 4 to 5 credit cards using velocity banking. So I selected another card and just starting to chunk my paycheck on it. And I used the bi-weekly method this time to do it. So rather it's bi-weekly, monthly, or commission, it all seems to work the same, getting the money onto the credit card or the card that you're trying to reduce. So in this case, the credit card that I wanted to reduce was $3,687, and this was the beginning of the February. The February statement, I'm sorry, was about 5,000, and then the new balance was 3,687 that I started with. I first took my income for the entire month, those two biweekly checks, and dumped the entire check in there of 390. And I also had $190 left from January. So that also helped a little bit out, and I should have included in that. So I did have about $200 cash flow from February and January that kept me going a little bit more. So now $297 that I was able to only have left as a balance on the credit card. But again, we want to put our expenses back on the credit card because that's the purpose. I'm putting everything that I have, all my money, all my credit card, all my expenses onto the credit card and then paying my various bills throughout the month. So that $2,856 in expenses went back on a card. Now this amount is lower than the $3,000 in expenses. This amount here, they're both expenses. So initially the expenses were $3,000, but because I'm putting my entire check onto the credit card, which asks for a payment of $144, I'm making the payment of $144 when you put your paycheck onto the credit card. So this $286.56 is minus the $144 from the expenses. Okay, and just do the math again. So $3,000 in expenses that was here, but because I put my entire paycheck onto the credit card, I was able to create cash flow of $144 minus $144. That gave me $28.56 in expenses. Now I needed to calculate some interest for the month to be added. So in order to do the interest, I wanted to take I just went back to the highest amount that the credit card was at, $36.87, and the interest rate on this particular card is $26.49. So 36.87, and the interest rate on the card is 26.49%. I'm gonna take that to the decimal, 26.49. Multiply that by 26.49, and that gave me 36.87 times 26.49. That gave $976 rounded off, so I can get the monthly rate and the daily rate. So to get the monthly interest, I'll divide by 12 and get 81.36. So this gave us $96 and some cents. Then I divided that by 12 and gave an average monthly interest rate of 81.37. Now to get the daily rate, I'll do the same thing. I'll take that high balance of 36.87 times interest rate of 26.49, and that still give me 96 and some change and then I'm gonna divide that by 366 days because that's what we're in the leap year rather than 365. So I take that 976.6863, divide that by 366 days, and that would give me a daily rate of $2.67 a day. So just wanted you to know about that. You can have the average daily balance in general, and then take get a monthly interest rate by the month or by the daily. So I then added back 82 cents, kind of rounded it up, 82 cents, and that gave me a new balance of 32.35 in the first month of January. So I wanted to separate that here. So this is February 2024, and I ended up with a balance of 32.35 in terms of throwing my entire check in it. And I think I've also put some cash rewards in there also. So then I started off March with the new balance of 32.35. I throw my check into here. So here's the paycheck. And that gave me a balance of $155. Again, putting the expenses of $2,856 back in, and that's minus the 144 because we're making and satisfying the payment. Once you select, if you select a credit card, it's something that you do, and you make your payment, then whatever that payment is satisfied, and it should come off of your original expenses. So now I had a balance of $3,011 and throwing back interest for the month back in. Again, I'm just staying with the high balance just to give myself some additional cushion in general. But eventually, as I learn more, learn how to do it more, try to give more precise numbers. But for now, just still throwing in the same balance, and that'll give us $82, and then put the balance back up to $30.93. So I am looking at the balance, putting in all my expenses, putting in my check, and then I'm getting new balances, and I'm hitting the average daily balance. So that's one of the keys. Whereas I used to wait to the end of the month and make my payments, now as soon as I get my paycheck every 2 weeks, I go ahead and dump it onto whatever credit card I'm trying to pay off, and then start paying the bills from there. Paying the rent, paying the mortgage, paying utilities, gas, everything out of that credit card to bring down that average daily balance versus letting it stay on the card for 30 days. I no longer do that. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. Again, I used to wait the 30 days, maybe around the 20th of the month, and then pay the bills. No, now as soon as I get paid every 2 weeks, like this month on the 8th and on the 22nd, I went ahead and took that $1,695 bi-weekly paycheck on the 8th, and I also got it on the 21st. So these are the two payments. I'm no longer waiting to the end of the month. As soon as I get my paycheck and it's deposited into two different accounts, I bring it over to the credit card that I'm trying to pay down and just pay it. Just pay it. Last month I did keep $190 on the back end. This month, just pretty much threw everything at it. I did hold back maybe $20 in cash in general. So now at the end, so if I would have made two regular payments for February and March of 144, that would have been $288 that I would have paid on the card for 2 months. Now, because I did velocity banking, I'm looking at what I started with the balance of February 3687 and taking the difference of the balance in March 3235, subtracted 2, and I came up with $594 of payments that was made over the time. And then I took that $594 minus the 288 to come up with a difference of 306. So again, if I would have made my regular payments for those 2 months of 144 principal, interest in general, they would have come up to $280. But because I threw everything that I had in terms of my paycheck and it helped to bring down the average daily balance, I was able to make payments of a difference of 594 from the beginning to the end balance. Then I minus that for the 288 BB and came up with a difference of $306. So in general, for me, velocity banking, for me, velocity banking, I really like it. I started in December because I couldn't not obtain a personal HELOC, a personal line of credit or a HELOC. So I looked at starting improving my credit. Went after these credit cards, and I can say that between 10 to 15,000, I've been able to reduce the credit card payments in general. My credit score has gone up, I think, significantly across all the major bureaus and across all the major models. So I like that. My debt to income ratio has decreased. I started off at maybe like 350, and now I'm down to like 319. I pulled myself off as authorized users. So there's a number of things that I've been running, a number of experiments that I've been running and trying to use velocity banking that I really like. And I'm running with my clients, and I'm continuing as I continue to understand velocity banking. So thank you very much for stopping by and sharing this time with me. Again, as a disclaimer, I am a political economist. I am not a CPA, an attorney, or a financial advisor. I'm just showing my experiences with velocity banking. I heard some things about it. I came across it. So I just started running experiments with it to see how it works. And I really like it. I think it has the potential, if it moves to a larger scale or scale up, to serve various minorities communities in general, with saving billions, if not trillions of dollars back into their communities and back into your own pocket. So rather with me or anyone else, I really encourage you to please look at velocity banking and see what it can do for you. All right, until next time. And all right. In conclusion, what I'll be starting off next month is experimenting velocity banking, hopefully with a equity line of credit. After I cleaned up some of my credit, I went back to another lender. It was just I was just going through my emails, and something told me, or the spirit I think told me, to stop and go back to this lender. I went back to this lender again, and I applied, and the numbers started really looking good. I forgot about this lender, kind of put it on the back burner, but something really helped me to go back and look at that particular lender. And yeah, I think it's going well. So next month, or hopefully I'll start doing velocity banking with a home equity line of credit, which I initially really wanted to do, but had to clean up some things. So thank you very much for being a part of this journey, and you stay blessed. Have a great day. Bye-bye.